Alhamdulillahi Rabbil Alamin. Assalatu wassalamu ala Rasulillah. Everyone, welcome back to our channel here. Today we will be exploring the second type of banking risk, and that is market risk. And market risk can be further broken down into interest rate, profit rate, currency, equity, and commodity risk. And in order for us to identify where are these risks coming from, so we need to essentially look at the Islamic banking balance sheet again in more detail, so that we can actually see where are the risks coming from. So, for example, as we see earlier, by definition, market risk is potential losses coming from changes in interest rate and profit rate, changes in the currency rate, changes in equity prices, changes in commodity prices. So we are looking at the fact that changes in this interest rate, profit rate, currency rate, equity prices, and commodity prices, how will they be impacting banking profit and capital? So that is our main concern. And we can see that in the broader perspective, or from the macroeconomic perspective, market risk can be illustrated based on the respective financial market disruption or instability caused by policy or caused by market forces. So we can see that market risks are actually risk affecting the entire financial market. Our main concern here is how market risk is impacting banking performance, right? So this market risk can be in the form of stock market crashes, and we can see the recent stock market crashes in the USA from the Trump 2025 tariff right after the announcement of Liberation Day by Donald Trump back in early April. The stock market in the US just tanked down by more than $6 trillion. So how this will affect banking performance? Interest rate hike. This is again, we can see during the COVID-19, the Feds have basically pursue their contractional monetary policy to fight inflation by hiking up interest rate from 1% to 5%. And we can see how this will affect banking profit. Very interesting, very interesting situation to analyze. Currency fluctuation, this can be caused by many factors. And we can see, for example, one of the prediction from the stock market fallout in the USA is that there will be a flight to safety into the bond market, causing bond prices to go up and interest rate to come down. And that will make it easier for the US government to refinance their debt by issuing new treasury at a lower interest rate. But that was not happening. Instead, we see the huge dumping of US treasury by Japan and China that causes interest rate to fall a bit, to go up instead of coming down, and that have caused some dollar volatility as well. So how this will affect the banking performance? This is a very interesting situation to analyze. High oil prices may be due to OPEC cut on production, geopolitical shock coming from the Ukraine war, which is not ending, pandemics, COVID-19. So how will all this factor, which is affecting the market, will be affecting the banking company or the banking firm? So this is our main concern in the study of market risk in banking. And for that, we need to look at the Islamic banking balance sheet again in a more detailed manner, because now we will be breaking down the asset portfolio into their respective categories so as to capture the component of market risk in banking, and that is interest rate, profit rate, currency, equity, and commodity risk. So what we will see here is that when we look at the asset portfolio, the portfolio can be broken down into two main categories, which is the financing category. So this is the property financing, hire purchase, and personal financing. And this is where the interest rate risk will be impacting banking asset, because changes in the interest rate for property, hire purchase, and personal financing. For property, we got 7% interest rate or profit rate for Islamic bank, and 5% HP, and 10% personal loan or financing. And changes in the level of interest rate will be impacting this financing asset. So higher interest rate, will it be able to impact the performance of the asset financing? So if interest rate goes up by 1%, is it possible for the bank to raise the loan rate from 7% to 8%, HP from 5% to 6%, personal financing from 10 to 11? Can the bank be able to accommodate the higher interest rate in their liabilities? So if interest rate goes up by 1%, can or not the saving rate be increased to 2% and fixed deposit to 3%? And this sensitivity of the asset and liability to changes in interest rate, that would be the main focus of our examination of interest rate risk for conventional banking and the profit rate risk for Islamic banking. And when we look at the investment category, where the bank uses deposit fund to buy sukuk or stocks or commodity, so we will see that if there is a stock market fallout, then it will be affecting the stock market, stock position of the bank, and of course that will incur a huge loss to the equity position. So this is again what we are trying to understand. If the bank buy sukuk either for holding or for investment, a change in interest rate will be affecting the coupon payment and the trading of the sukuk from the volatility in the interest rate. Likewise, commodity prices, changes in oil prices or anything related to commodity trading will affect the bank, because they have a position here 2 billion, and this is how we are going to analyze the impact of market condition on the bank investment in sukuk or bond, equity, and commodity. Okay guys, I think we can just stop here before we can go into the specific risk one at a time. Inshallah, I'll see you again in the next presentation. Assalamualaikum warahmatullahi wabarakatuh.